Until really quite recently, it looked like Argentina's president Javier Milei had achieved the impossible. He'd somehow fixed both Argentina's trade and budget deficits, he'd had some of the highest approval ratings in the world, and he quickly became an inspiration to right-wingers everywhere. Unfortunately for Milei, a slump in the polls, a bad result in the Buenos Aires local elections, and a weaker than expected economic recovery sparked a sell-off in the peso, which started in July but has since continued, despite a generous $20 billion bailout by the Trump administration. So in this video, we're going to take a look at what's gone wrong for Milei, why Trump's bailout hasn't worked, and whether there's a way out. Could you rank every single politician in the world? Hear our thoughts and argue with us on our podcast, The World Leader Leaderboard. Find it on the TLDR Podcast YouTube channel or in your favourite podcast app. So, let's start with a quick recap. Most of Milei's recent woes have revolved around Argentina's currency, the peso. Before Milei, the peso essentially had two exchange rates, the official rate, claimed and managed by the government, and the unofficial or actual rate, known as the blue rate. When Milei took charge in late 2023, the official rate was about 370th the dollar, while the unofficial rate was about 1,000th the dollar. The simplest thing Milei could have done would have been to just simply devalue the official rate to the unofficial rate, thus unifying the currency and allowing the peso to float. However, while he did immediately devalue the peso to about 800th the dollar, he didn't go all of the way, because he was worried that such a steep devaluation would cause destabilizing levels of inflation. Milei then opted for a crawling peg, which involved devaluing the peso's so-called official rate by 2% each month, with the idea that the official rate would eventually catch up with the unofficial or market rate. While this policy succeeded in tamping down inflation, the two rates never converged, because the peso's unofficial rate kept declining even faster than the crawling peg. So in April of this year, Milei took the leap, scrapped most capital controls, and let the peso float, essentially unifying the two rates. Originally, it looked like it was a success. The peso stabilized at just below 1,200 the dollar. This was both below Milei's stated lower bound of 1,400 and even below the 1,250 or so that the unofficial peso was trading at before unification. However, in recent months, the peso has started falling again. This decline began in July, but accelerated dramatically in August, when Milei's approval rating slumped and his party underperformed at the Buenos Aires provincial election, sparking anxieties among investors that Milei's reforms wouldn't actually stick. Milei worried that such a steep decline would stoke inflation, but didn't want to intervene directly in currency markets, both because it would require him to burn through his limited foreign exchange reserves, and because he had sort of promised the IMF that he wouldn't. Instead, Milei originally tried some more fiddle-y policies, like reinstating certain foreign exchange controls and raising reserve requirements for banks. In other words, demanding that banks buy more pesos to artificially create demand for pesos. However, when the sell-off accelerated after the Buenos Aires elections on September 7th, it quickly became apparent that fiddle-y policies weren't going to be sufficient, and Milei had to intervene directly, buying up pesos with dollars on currency markets. This obviously wasn't sustainable, given Argentina's limited reserves, and it soon became clear that Milei was going to need some sort of bailout to avoid a sudden and severe devaluation. Fortunately for Milei, on September 22nd, with the peso trading at nearly 1,500 to the dollar, US Treasury Secretary Scott Bessent took to X to announce that the US would, quote, do what is needed. While it wasn't immediately clear what form this bailout would take, the mere prospect of American support was enough to turn the tide, and the peso promptly started strengthening against the dollar. 2 days later, on September 24th, Bessent announced that the bailout would center around what's known as a swap line. Swap lines are basically arrangements that allow financial institutions to swap their currencies with one another at whatever the exchange rate is at the time. They're usually done between central banks, but in this case, it's actually the US Treasury that's offering the swap line. In practice, this means that Argentina can swap its pesos for US dollars, up to $20 billion of them, at the current market rates. And importantly, when the time comes to swap the currencies back, Argentina can swap them back at the same original exchange rate. This makes things a lot safer for Argentina than if it were just to borrow dollars normally, because if the peso devalued in the meantime, repaying such dollar-denominated debt would become way more expensive. Swap lines like this are supposed to convince markets that the current exchange rate is stable and provide Argentina with more dollars to defend the currency if it needs to. Originally, this looked like it had worked, and the peso strengthened from nearly 1,500 to the dollar on September 21st to just over 1,300 to the dollar on September 26th. But since then, things have once again gone downhill. In the week since, the peso has weakened, rising to above 1,400 to the dollar at the start of October. Milei has stabilized things by burning through Argentina's dollar reserves and hiking interest rates in an attempt to make saving in pesos more attractive. But both of these strategies have serious drawbacks. Super steep rate hikes have slowed down the economy, which was already shrinking in the second quarter, and traders currently estimate that the Argentinian treasury only has about $700 million left in reserves, about enough to last the week. So why has the peso resumed its decline? Well, it's in large part because markets are no longer sure that Milei's reforms will stick. The economy is struggling, he and his party are sliding in the polls, and it looks increasingly possible that his reforms will be stymied by the opposition, especially if they can replicate their recent success in Buenos Aires in the midterms, which are due for October 26th. Markets would also have preferred a swap line with the Federal Reserve rather than the US Treasury. After all, the Fed can create unlimited dollars, while the Treasury cannot. But it's perhaps fundamentally because the peso is just overvalued relative to the actual strength of the Argentinian economy. Growth has stalled, and Argentinian exports have been so weak that Argentina's trade account has flipped back into deficit, meaning less demand for pesos. Furthermore, on an inflation-adjusted basis, the peso is still pretty strong by historical standards, and stronger than peer currencies. As always, the big risk for Milei here is that he gets stuck in a doom loop. There's always been the risk of an electoral doom loop, whereby falling poll numbers trigger sell-offs in the markets, stunting any prospective economic recovery, and thus pushing his poll numbers down further, etc., etc. But there's now the risk of a peso-related doom loop too, whereby Milei's interventions in the currency market undermine trust in the peso, causing more people to sell pesos, requiring more interventions, etc., ultimately ending in an inevitable and severe devaluation. You know as well as us that in the current climate, it's important to stay sharp, and perhaps even more important to be precise. Well, our sponsor this week, Henson Shaving, knows this better than anyone, and they take pride in their precision. That's because their razor perfectly holds the blade at a 30-degree angle and extends it only 0.0013 inches, less than the width of a human hair, which means incredibly tight tolerances, very high standards, and superb precision. This also results in a much healthier shave compared to the overpriced plastic razor cartridges that leave your skin feeling sore and mistreated. Speaking of plastic, you probably don't realize, but over 2 billion plastic razor cartridges are thrown into landfill each year in the US alone. So not only are they wildly expensive, but they're also terrible for the environment. The same can't be said for Henson, as their razors are completely plastic free. From the blade to the box, everything Henson ships you is entirely recyclable. Henson strives to protect your skin in a way that's accessible, affordable, and kind to the environment. And while it might sound intimidating changing the blades yourself, it's actually remarkably easy to do, and even kind of satisfying to take full control of your shave. If you've been meaning to try out Henson, there's no better time than right now, as we're offering you 100 free blades when you purchase using the code TLDR at checkout. Just go to hensonshaving.com/TLDR or click the link in the description and you'll be on your way to a healthier shave.